Good morning, everyone. Welcome to CWM. Today's mini seminar topic would be mortgage overview, and especially we want to talk about 2-1 down buy down program. We invited today our special guest, Sean Yeo from Fairway Home Loan. Most of us are familiar with Mr. Yan. He's the CEO of Fairway Asset Corporation down in Virginia. So we invited to our Zoom meeting today. Good morning, everyone. Good morning, Mr. Yeo.
Morning. Good morning, Mr. Lee. 안녕하세요.
네. 네, 안녕하세요. 자, 시작해 주시죠. 네.
So I provide the presentation material. So good morning, Silent. I hope everything's going well with you. And so I'm gonna discuss about the temporary buy down program and some non-QM product and current market trend today. The first, so temporary buy down program is giving a borrower to enjoy lower payment for the first 2 years. It will apply for the FHA, VA, and conventional. So purchase only and primary residence and second house. Temporary buy down fee is I'm going to show the some worksheet on the next slide. Temporary buy down meaning is like so usually we have a 2-1 buy down and then 1-0 buy down tiers. So 2-1 buy down mean is if today's rate is 7%, so first year, so we save 2%, which is we're paying 5%. And then second year we save 1%, which is 6%. So first year paying 5% interest rate, second year paying 6% interest rate, and then after third year, you have to paying 7% interest rate. So it is very short-term buy down program, but it will give some more purchasing power to the borrower. So next slide will show the calculation. So let's say 2-1 buy down program is first year. Let's say today's rate, let's say 5%. First year is 3%. Second year is 4%. So which is 5% minus 2%. So payment is $1,476. But regular payment for the 5% is $1,879. So just saving $403 every month. So yearly saving is $48.36. The second year is a 1% saving, which is payment is $1,671. And then we thinking $1,879 is 5% payment. So $208 savings per month. So yearly $24.96. So I'm like based on the loan amount of $350,000 and then 5% interest rate. Anyway, first year with annual saving is $48.36, and the second year the saving is $24.96. So total saving is $7,332 during the 2-year period. So actually 2-1 buy down is the lender charging this fee to the buyer. So there is no free. So even though we're paying less, so the lender will charge the saving amount, exact saving amount to the closing table. So usually this is about less. If it is $350,000 loan amount, this is about a 2% of the loan amount, the kind of discount fee. So when you think like if you have a seller concession, so we can use this program to enjoy the lower payment and the lower interest rate for the first 2 years. But I mentioned already, this is not free. So if you go to next page, so 2-1 buy down program is kind of benefit to the buyer as temporary savings as I mentioned, like the first 2 years, they can save 7,000, and then third year, we can do some refinance. So 2-on buy down program is like we had it from 20 years ago. So whenever interest rate is going up and then house value is like a kind of high, so lender give a 2-on buy down program. So like we're expecting in 1 year or 2 year later, interest rate will be started going down. As of today, it's around 7%, but less government is working on the rate, and then if the government is working on the rate for the next year, we'll be going 6% range, and then in between 5% range in 2 years. So that's why the lenders selling this kind of program. And we have some more programs for the non-QM product, which program is good for some self-employed borrowers. And then this program is very less sensitive. This program is for the less sensitive interest rate buyers. So we have a bank statement program, use 12 months business bank statement to qualify the loan instead of tax return. So usually QM loan is, which means conventional VA and then FHA loans. We used for 2 years tax return, W-2 and pay stubs to qualify the loan. But bank statement program used for 12 months business bank statement, and then we collect all the 12 months bank statement, and then we using for the deposit as an income. Let's say deposit is 100,000 every month. So that's the income. But expense ratio of the most of the businesses is 50%. So net income, we are calculating net income as a 50% of the deposit. So let's say 100,000 deposit every month, and then expense ratio factor is 50%. And we can use 50,000 as a monthly income. So if we like use a bank statement instead of tax return, we can help a lot of self-employed borrowers. Because tax return could be different figure. So when I see the many customers, like their bank statement shows like 100,000, 200,000 deposit every month, but their tax return only shows like 100,000 net profit per year. So that kind of borrower cannot get a loan. So that's why the many lenders right now introducing bank statement program to qualify that kind of borrowers. Frankly, that kind of borrowers is very strong because they have the money and then had a pretty good credit and then good cash flow. And we have another non-QM product, which is Investor Flex program. So which program is use a renter income to qualify the loan. If the mortgage payment is 5,000, so if it's 4,500 rental income, the loan will be qualified. So we don't mind how much they have a debt and how many house what they have. So this is only qualified for that subject property only. So if the subject property had the 5,000 rental income and then 4,500 rental income and then 5,000 mortgage payment, the loan will be done. So the beauty of this program is they allow for the LLC name. Like if we can buy like ABC LLC, because many conventional, like a typical conventional FHA VA lenders, they not allow the buying as a LLC name. So we can buy only personal, like use a personal guarantee. But this program is allow for the LLC. And second thing is foreign national also allowed. And then, so usually Fannie Mae, Freddie Mac, they allow for the 10 property, and then they cannot buy anymore, but this program allow no limit on owned property. So this is the investor flex program is good for some investors. They buying the houses, but they not have a good income or too many houses kind of situation. But investor flex program need at least 25% down payment and need a good credit to get a good rate. So this non-QM product is very popular right now. So when the economy is going down, people like start to reduce their taxable income, even self-employed, and then W-2 wage earner will be okay, but self-employed usually they reduce their taxable income to survive. So for example, restaurants or some doctor's office or liquor store or nail shop, they keep the cashes and then they not do the tax return for the whole amount. So that's why in that case, so this kind of program is very useful for the buyer, and then we can find some more buyers with these programs. Our goal is kind of not only selling the product, we want to help to find the borrowers from the realtor side also. And then I'm gonna talking about the non-QM product later on, and then so if there is any questions, so you can contact me or contact Patricia Choi or Chris Park about this program, because it's kind of case by case, and then very need some unique requirements. That's why need a consult with a loan consultant. And everybody talking about the interest rate every day right now, and then talking about the nuclear crisis from the Putin, and then interest rate crisis for the worldwide. So people keep watching right now, so every day, the stock market and then interest rate market right now. So the rate movement, I'm placing on the slide for the rate movement. So which is the MBS and treasury price. MBS is mortgage-backed security price. This is directly related with the house mortgage interest rate. So UMBS 5.0 mean is mortgage-backed security. So it's 5%, and then UMBS mortgage-backed security is 5.5%. 9672 mean is under 100, which is discount issues. So if you want to buy 5% mortgage coupon, you have to pay 3%. And then if you're buying a 5.5 mortgage bond, you have to pay 1.2%, which means the bond is undervalued right now. So when you see the treasuries, 2-year treasuries 4.3, 5-year treasuries 4.1, 7-year treasuries 4.0, 10-year treasuries 3.9, 30-year treasuries 3.9. So we see which this figure shows we are in the recession, because short-term treasury is higher than long-term treasury, which is typical recession, the market trend. So people asking if the 5-year is better rate or 7 years better rate today, actually treasury and then mortgage-backed security shows the short term is more expensive than longer term right now. So right now, I better to sell the 30-year fixed product right now, because kind of safe, and then will not change a lot. So many people thinking the ARM is like a 5-year ARM is kind of benefit, but it's kind of risky. So we don't know how long it will go. So that's why I'm recommend 30-year fixed, longer fixed term product. Because 20 years ago, people using ARMs and the negative mortgage, and then that's why the market crash, and then 2008, we have a financial crisis. So today's rate is 30-year UMBS 5.0 is 96.72. And then when you see the graph, it's pretty looking bad. So which means is, so MBS price are significantly weaker so far today. So which means today, so interest rate will be going down more, going up more. So like for the one week, 2 weeks, so we can have that kind of rate, but November 1st and 2nd, we have another federal meeting. So if they raise up the interest rate one more time, and then it's gonna be UMBS will be around 6.0 ticket, not the 5.0 ticket. So which means interest rates are going up at least 0.5% at the beginning of the November. So which means actually 7.25 around there. So if I'm telling the client every day, so if you want to buy the house, today is the best day, not tomorrow. So like somebody joking, today is the youngest day for me. So that's true. And today is the best day to buying a house. So because interest rate movement will be not favored to the borrower in next 3 to 6 months. So government thinking will be, they're gonna maybe stop or reduce the rate start on next February or March, around there. So we are also hoping interest rate going down tomorrow, but it will take a little bit more time than we thought. And today we have a mortgage application, and then PPI is purchase price index, final demand. I saw the CNBC this morning, but PPI is getting better right now. So it was 8%, but it down to around less than 1% range. So which means the federal will think about the rate hike. So today we're going to have a federal open market committee minutes, 2 p.m. And then tomorrow we have a very important thing like a customer price index tomorrow morning, 8:30. If the CPI is over 8%, so we're going to think about another 0.75 rate hike. If it's less than that, maybe 0.5. So tomorrow is a very important day for the next federal meeting. And then we're going to have a job risk claim, and then treasury statement, and then federal balance sheet for tomorrow announcement. So it's kind of today and tomorrow is a very important day for the remaining of the month. So I hope everything will be going well. And then interest rate, I hope interest rate will be stabilized. There is no reason they're shaking up the housing interest rate. So that's why I'm hoping interest rate is stabilizing and then a little bit getting down to stabilize the market. I think 2-1 buy down as there is some little bit short of the explanation. So it's kind of complicated. So I think it's better to ask loan consultant directly if you have a question. But the concept is like we pay 2% less and then 1% less and then actual rate at the third year, and then we have to pay the differences. And then this one should be paid by seller, not the buyer. That's kind of some tricky point of this program. So do you have any questions?
Yes, Mr. Yao, of course, the question is, this buy down is kind of a discount point program.
Yes.
Basically, it's a discount point, right?
Yes, buy down, which means it's
Buy
discount.
down. So in Korea, we call what? 선이자, right? 선이자를 먼저 페이하고.
네.
Okay. So this is some kind of a proposal, not the proposal, but idea. You said is buy down amount, let's say with this chart, $7,332. You said seller has to pay or buyer can pay?
So if you have a seller concession. So
Okay. So that's what I was going to tell everyone. So we can ask to seller to help this kind of amount. In other words, basically, if seller pays this is $7,332, that means basically it boils down to price negotiation.
Yes.
Basically, same thing, right?
Kind of seller concession is the same concept. So they can use for the closing cost or buy downs and then some discount of the rate.
Right. Okay. So seller's concession typically means, let's say, purchase price is $500,000, right?
Yes.
And if we want to call it seller's concession, then we're going to add the $7,332 onto the purchase price. So on the paper, purchase price will be 500.
Let's say 51,000. I don't know, 510,000.
Right, roughly, yeah. Okay. So then actually you're going to give the loan based on $510,000. But indeed, the purchase price is $500,000. Right. So the seller can, in a sense, use the $10,000 to cover this kind of cost. That's what you're saying, right? Seller's concession.
Yes.
Okay.
Because all the lenders, they saying so that because the market will be turned to the borrower's market right now. So like New Jersey and then Virginia is it's a very strong base of the customers' demand. So that's why not yet, but the other states. So we're talking about the 50 states. So like a middle state, like Michigan or so Chicago, maybe Tennessee. So all the middle states is already turned into the buyer's market already. So that's why they're using this kind of program a lot.
Okay. So we talked about the seller's concession, but just without saying seller's concession, let's say we keep the purchase price $500,000, and if seller just contribute this $7,332 as a cash.
Yes.
Basically, same thing. We can do that.
Yes.
Or from $500,000 purchase price, we negotiate the purchase price down to $490,000. Okay, instead of purchase price $500,000. So new purchase price will be negotiated. Purchase price will be $490,000. And then buyer can pay this buy down amount. Is it basically the same thing, right?
Yes.
Okay. So basically same thing, but we can do seller's concession sort of approach, or just simply price negotiation?
That's right.
Okay.
So because I'm telling the seller concession because this programs are usually using at the buyer's market. That's why.
Okay. Right.
Because seller's market, nobody giving a seller concession or any kind of negotiation, but buyer's market, usually seller gives like a 2 to 3% to the buyer. Yeah, for the closing
But what
cost.
I'm saying is, if we negotiate the purchase price down to $490,000, I mean, basically based on the buyer's market. That's why, because it's a buyer's market, I mean, going into buyer's market.
That's right.
That's why the seller want to discount.
That's right.
The $10,000 from the original purchase price. So basically, it's the same thing, rationale.
That's right. Yeah, same concept.
Okay, same concept. Okay. I don't know any participant has any question, but I have a quick question about this next page, non-QM product. It says no limit on the, it sounds like you said there's no limit of how many units we can buy as an investor, as an LLC name. But the normal case, the individual, okay, let's say Stephen Lee will buy a bunch of properties, investment properties. There's you're saying there is a limit, how many the property I can buy?
Yes. So Fannie Freddie allow 10 financed property.
Oh, okay.
So you cannot buy more than 10. 10 is a lot.
I was thinking by 20 properties.
That's right. That's right. But, so like some of the investors, they have like 30, 40 houses or over 10 houses. They cannot use a mortgage company. But,
I see.
Yeah, but this program just doesn't matter how many they have right now. So from this lender, we can buy 3 houses.
Okay. All right. So any other questions before we let Mr. Yo go? Okay. Because we invited Mr. Yo from Fairway Home Loan, because a lot of people is talking about interest rate, what's going on and what will happen. So I think we have some ideas from what Mr. Yo says today. Okay, so Mr. Yo, I really appreciate it. And Chris and Patricia, we all see you again pretty soon.
Thank you very much, Mr. Lee. Thank you for the inviting.
Thank you.
Have a great meeting. Thank you very much.
Thank you.